Hey everybody, Simon Dixon here. Quick intro. I just came back from the Crypto Asia Summit, which was originally a conference that was meant to be held in Tokyo that I was going to speak at. Because of the lockdown, I'm recording and they changed the event to a virtual event. Some of the biggest speakers in crypto were there and lots of other people as well. The quality was very, very shaky. I think the audio came out okay, but the picture was very pixelated and stuff. But we thought that it might be a presentation that you'd like to hear about, because some of you may not know how the last 10 years of what I've been building at Bank to the Future and our team have been building relates to the next 10 years and some forecasts that we're making around crypto investment trends and general trends in the industry. So I thought the organizer made the video available so we can stick it on our YouTube, and just wanted to give a personal intro to you so that you add some context and understand why that's being uploaded. Also remember, we're also looking for you to help us grow our community. So if you enjoy this, hit the like button. In fact, hit the like button now if you could, so the YouTube algorithms get more people to see this, and also share. Make sure you subscribe. As we said in the presentation, there's a lot more I'm going to be updating over the coming weeks and months ahead, and this constantly changing environment. And at the very end of this video, I actually revealed the 5 to 6 things that I'm investing in right now and how I'm thinking about that. As you know, I could only give so much detail. I'll make sure that we're sharing with you how I'm going to be able to give more detail on that in the future with the course that we've been planning. So I hope you enjoy the presentation. Over to the Crypto Asia Summit, meant to be in Tokyo, but now virtual event. Enjoy, and I'll see you on the other side. Hello everybody, sorry for that slight delay. Was experiencing some technical issues, so I'm just going to shave about 17 minutes off my presentation. So for those of you that haven't met me, my name is Simon Dixon. I'm the CEO and co-founder of banktothefuture.com. And today I'm going to be talking about crypto investment trends 2020. The way I'm going to do this, I'm going to split the presentation into two. I'm going to give you a decade of crypto experience, having spoke at the very first Bitcoin conference in the world, and having published the very first book in the world that included Bitcoin. I'm going to share a decade of experience, and then that's going to lead to some forecasts. So to just give a brief background, I've dedicated the last 20 years of my life to the subject of monetary reform. Started as in economics, and then joined a community called the Monetary Reform Community. And that led me to speaking at the very first Bitcoin conference in the world. And I've been investing in the industry ever since. I'm now a shareholder in over 100 of the largest companies in crypto, from Kraken to Coinbase to Bitfinex to Bitstamp, Blockchain.com, Circle, Ripple Labs, and many other companies in between. So what I'm going to do today then is give you a quick presentation on the last decades, having been involved in the industry for over a decade now. And then that's going to lead to my crypto forecasts and some of the investments that I'm making at the moment. And I don't think we have a Q&A feature here, but what I'm going to do, hopefully this all works, is I'm going to move over to a screen share where I've prepared a presentation. And as I get more in depth into subjects, I'll move over to the video so it looks a bit more interactive. So I'm hoping right now that you can see my screen, which will have, this is me if you want to follow me on Twitter. And I'm just checking some messages with my colleague to see if you can hear me okay. Let's have a look. Cool, the screen is all good. And so I'm going to jump straight into the content. So here's where you can follow me on Twitter, at Simon Dixon Twit. And if I don't cover any questions in this presentation, then feel free to ask some further questions to me on Twitter, and I'll endeavor to get through those. So As I said, I'm the co-founder of banktothefuture.com. We're currently celebrating, because we're actually the longest standing company in crypto. It's very interesting that this conference was originally meant to be held in Japan. I spent several years of my life in Asia. I lived in Hong Kong, and Japan is certainly one of my most favorite countries in the world. I can't wait to come back and visit. But also its deep history in Bitcoin, because obviously when we founded our company in 2010, there was only a few crypto companies. One of those is Mt. Gox. We all know what happened to that, which was a Japanese crypto exchange that went bankrupt. And there were some others like BitInstant and various others, but those unfortunately went down. And so we're now the longest standing company in crypto. So to give you a little bit of history, this is our 2020 portfolio. As I said, we launched an online investment platform called banktothefuture.com, which was really funding the very early crypto companies before Bitcoin was really even anything that a venture capitalist would look at. So we were responsible for seeding many of the companies that are the largest companies here today. Kraken was one of the seed rounds that we did, and various others. But it all began in 2010, and in 2010, we were looking. I was part of a community called the Monetary Reform Community. Myself and my wife, Bliss Dixon, co-founded the company, and I launched a book called Bank to the Future. That book, Bank to the Future, was the very first published book in the world to include Bitcoin. And it was forecasting many of the monetary issues that we're experiencing today, because it took a real deep dive into many of the monetary problems and the technology that would be used to solve those, which really leads me to the investment theses that I've been following over the last 10 years, and I'll be following over the next 10 years, which is that I believe every single financial product is going to be disrupted by technology one step at a time. And there's going to be two movements: a centralized movement and a decentralized movement. And that really started with Bitcoin. And so for me, at Bank to the Future, we were looking to build, so the book came out, and then we were looking to build a way for people to own their own money, spend their own money independent of banks, and be able to not be subject to the fact that banks create money as debt, and try and create what we called a non-fractional reserve bank. At that time, it was impossible to do it. So when we were searching for solutions, I was invited to speak at the very first Bitcoin conference in Prague in 2011. You can see the original branding of Bank to the Future, and this is me speaking at that first conference. On my YouTube channel, I have the complete archives for those of you that are interested in those. My YouTube channel is Simon Dixon. And you can get some of the archives that I go through, but this presentation will give you the overview. It was a really liberating experience for us, because for the first time we saw the ability to actually create an alternative financial system and financial industry on top of technology that was not dependent upon fiat currencies. And so the book, I talked about three concepts, which, and this made up the investment theses, and the investment theses that I'll share with you in the second half of the presentation on the crypto investment trends. The first was an observation, really, that banking will have to be reformed in a very dramatical way because of three problems. One is that when you deposit your money with the bank becomes the legal owner of your money. The second is when they become the legal owner of your money, they spend it as they choose and redirect the flow of funds to asset classes that the bank thinks is most likely to be repaid and most creditworthy, which tends to be real estate. And the third was that because fiat currencies are based off a Ponzi scheme whereby they're created as debt, and therefore you have to increase debt in order to increase the supply of money, you are always going to have an increase in debt from individuals, businesses, and governments. And eventually, the Ponzi scheme comes to a monetary reform, and I discussed many of those monetary reforms, but it would dilute the value of savings and fiat currencies. And so when I found Bitcoin, it did the exact opposite. It was a form of money that you could own, i.e. if you own the private key, then you can control it rather than having to rely on a third party. It was money that you could spend globally, just as easy as sending an email. And so therefore there's no party in the middle to intercept the transaction. And thirdly, the money supply was fixed, giving it the potential to be the hardest form of digital money that we've ever seen, that mimic many of the properties of gold, but were even harder and more of a fixed supply, according to the white paper and the release schedule. And so I saw the potential to actually build a financial system on top of this. The problem is that was pretty much impossible to get past the regulators at the time. So what we could do, what we could get past the regulators, was a securities business. So we started lobbying. We launched this in the UK, and we started lobbying regulators in the UK to allow us to create an online investment platform that would invest in financial technology companies. And so we did that, and it took us about 3 years to secure the relevant securities registrations that we needed. Really couple that with the fact that we spoke at the first Bitcoin conference, and because we invested in Bitcoin, it did well, so we never needed venture capital funding. We got ourselves in a position where we could implement regulatory changes and support the growth of the early Bitcoin companies that no venture capitalist or anyone was interested in looking at. The work that we actually started way back in 2009, 2010, got the attention of President Obama in 2012, and they implemented a reform of securities laws called the Jobs Act as a result of all the early work that we did in the UK. So it started to have more of a global impact. And so then we started working more and more on the securities side, and Bank to the Future became the world's largest online investment platform for investing in the equity of financial technology, Bitcoin, and crypto companies. And that's the Jobs Act then started making change in US securities laws, and then many regulators around the world started doing that. But the early research was from that work that we did with the UK regulator. In 2013, we were added to the regulators register, but there was a big problem. We were trying to support Bitcoin companies, and it was a very, very niche audience, nowhere near the number of investors as there are today. Very few were interested in investing, and there were very few companies as well. But we had a real belief in the growth of the industry, so we needed to put together a global model. So in 2014, we set about doing that, and the first product that we actually launched was a gentleman called Max Kaiser, who was the very first journalist on national TV to help people understand Bitcoin when he explained it on TV when it was $3. So Max Kaiser and myself partnered up and created a fund called Bitcoin Capital because there weren't really enough investors in the industry. We put a percentage of the money into Bitcoin mining, and the rest of it was invested in companies like Kraken and many other the early companies. The highest performing investments that we made were crypto exchanges, and we paid out thousands of Bitcoin to our investors when it was at a low of about $250. This meant that many of the investors that invested in Bitcoin Capital through our platform became wealthy as a result of all these Bitcoins that we paid out in dividends every day from Bitcoin mining, and also the private equity investment started to mature. And so once we had happy investors, we then ended up doing the same with Ethereum. So Ethereum launched the ICO. We had invested in some early token sales, and we launched a mining product that was invested in Ethereum mining. And many of our investors became very wealthy, and we started to build the world's largest community of wealthy investors, and many of which had made money and made their wealth through Bitcoin and Ethereum, and many of the crypto exchanges that we actually invested in. In 2016, something really interesting happened, and that was one of the companies in our industry that's one of the largest exchanges today, Bitfinex, went through a disastrous hack. Now, we had seen what happened and the impact on the industry of what happened in from Mt. Gox earlier. And so we started to put about a model whereby we could actually allow those hack victims to get equity in the company And we did it through our registrations at Bank to the Future, and have created a compliant process whereby people could take their funds that were lost in the exchange, digitize a token that Bitfinex created, and allow them to swap that for equity. And that ended up becoming a very successful investment, paid out all of the 2017 profits during the bull market to the shareholders, and ended up getting a significant increase in the share price as well as a dividend return. So this really started, the exchanges started to promote us. And then in 2017, we decided to release the Bank to the Future token, which is a membership token that our investors use to get priority access to deals, discount on our trading fees when buying and selling equity on our platform, and also rebates on their investments as a loyalty scheme. The more they invest, the more they build their portfolio, the more Bank to the Future tokens they get. And the important part was that we registered it with the, we filed our Form Ds with the SEC, did it in a compliant way, and therefore didn't experience many of the issues that many others did with their token sale. We had a US SEC registered broker-dealer, and in 2018, we decided to sell that to Coinbase. And the reason that we did that is because we wanted to work on a global model for securities and the security tokens, and the regulations in the US were restricting certain parts of that model. And so we decided to sell that broker to Coinbase, and they're now using it to build together their security token strategy. We also launched a secondary market whereby qualifying investors outside of the US can buy and sell shares in our special structure backed by the largest companies in our industry. So you can now buy and sell some of our SPV shares backed by shares in Ripple Labs, Kraken, Bitfinex, Circle, BitPay, Shapeshift, and many others. And in 2019, we started acquiring various other regulated companies in our industry, like a UK broker-dealer, another US broker-dealer, so that we could really put together that model for global securities offering for financial technology companies. And now at this stage, we're pretty much a shareholder in over 100 of the largest companies in crypto. Investors that qualify to invest can build a portfolio of companies, and that brings us to 2020, where we are today. So now I want to slightly shift gears for the last, how long have I got? 15 minutes. Sorry, I think we've got half an hour, so I can take some, go through the next crypto trends. So that gives you some context and background on our journey that brought us to be the longest standing company in the industry. And many of those crypto investment trends I talk about on my YouTube channel. So my YouTube channel, Simon Dixon, I've published many of my forecasts. And one of the videos, of the really early videos that I uploaded around about 2010 or 11 or something, from a presentation I gave in 2009, was a video called The Great Depression of 2020. And I forecasted the next decade of trends that would lead to the largest debt cycle in history. And now we're at what I believe at the end of a 75-year debt cycle in 2020. Now, what I didn't know, I talked about that there would be a systemic risk event that would lead to ginormous levels of indebtedness by the governments. And I didn't know that it would be a global pandemic, but that kind of brings us to where we are today. And so one of those videos that I released more recently, in 2016, one of the videos on my YouTube channel was talking about this concept of a central bank digital currency and how it could be used to implement radical financial and monetary reform based upon the work that they were doing in China. I also in 2019 released a video called how Bitcoin could become a world reserve currency by 2020 when these trends all come together. Now that might be a little bit ambitious, and it was, I talked about how this would be a worst case scenario, but these three forecasts, the Great Depression of 2010, the central bank digital currencies in my video in 2016, and how Bitcoin could become a world reserve cryptocurrency by 2020, all led to the belief that there would be a very big systemic risk event in 2020 that would lead to record levels of indebtedness And when the pandemic happened, it looked like that is going to be the systemic risk event. So we're forecasting, as a result of this health crisis, leading to an economic crisis, which brings up, fiscal and monetary reforms like we're experiencing right now, that lead to a financial crisis. And from that financial crisis, people are going to have to really, really rethink as we renegotiate into a new monetary system that I'm forecasting will be negotiated this year and in the years ahead. And so what we have to do as investors is we need to start thinking about some of these trends. And so the video that I released more recently on my YouTube channel was called The Real Estate Market Crash and the 10 Steps That Come Next. And in that video, I outlined, just it was the financial crisis and the economic crisis and the health crisis were becoming very topical, and we just went into lockdowns. I gave a forecast on how real estate would be the trigger for the financial crisis next, as due to record levels of indebtedness and the 10 steps that would follow. The end step would be a ginormous systemic risk event in the banking system that would require central banks to step in, and they won't this time use bail-ins because banks won't get away with that in the current environment. They won't use bailouts because the people won't actually be in a position or won't allow that to happen the second time round. I'm just going to switch to my face for this section, and then I'll do the final forecasts with the slides. Let's see if stop sharing works. Hopefully you can see me now. Azad, you'll let me know if they can see my face right now. But as I talked about, beware the central bank digital currency. There's a few reasons for this. The central bank digital currency is the last monetary tool that central banks have when quantitative easing is no longer propping up the markets, because the confidence of buying bond markets so that corporations can buy back their stocks is the reason why we had a 12-year fake bull market in the stock market after the 2008 financial crisis caused by too much debt. We've now got ourselves in a position of $250 trillion of global debt. Interest rates are pretty much zero around the globe, and monetary policy is no longer effective. So when people can no longer pay their debts because we've got record level of indebtedness, then that's going to create systemic risk in the banking system. Half of them have sold the debt onto your pension, so it creates a simultaneous pension crisis and banking crisis, which I believe leads us into a very depressive environment, which, by the way, can be prevented through financial engineering. The only tool that the central bank and government have left is the issuance of a debt-free money, a new money supply, which will be, I forecast, a central bank digital currency. The way that they will release that into the system is they will allow banks to go bust as they enter systemic risk events like we had in 2008. But this time they can let the bank go bust, but in order to protect consumers' deposits, they can issue and allow people to download an app with the central bank that will contain an equal amount of digital currency to the amount that they had at the bankrupt bank. This will mean it's non-inflationary money because you're swapping one form of money with another form of money which gets eliminated. This will be a way of releasing a central bank digital currency. They can also do it through helicopter money, as we're seeing. In order to stimulate and give credit to everybody, they can require them to download an app which contains central bank digital currency credits on it. And this is a way of releasing a central bank digital currency. And essentially, the central banks allow banks to go bust, or they could use it to bail out the pension system if the banks have sold all that onto your pension, which is what much of this debt has been moved onto through mortgage-backed securities, asset-backed securities, and many of the toxic assets that were never solved in 2008. And so through this way, you have a central bank digital currency. But this really is going to be one of the most destructive forces on personal freedom, liberties, and privacy, because we're going to enter a phase where essentially in this app will obviously be tracking software so that they can use it as a strategy to actually connect your financial transactions to the health crisis, whether you've had vaccines, whether they allow you to get onto planes, whether they believe that you owe tax that haven't been paid. So if you're doing a global transaction in one country, you conduct that transaction on Zoom where the servers are in the US, or maybe through that, and maybe you're transacting with somebody in China, then you have 3 governments that all believe that you should be paying tax on that transaction. It'll be connected to the central bank digital currency, which will be connected to the digital wallet, and they can either switch your passport off if they believe you're in a tax dispute, or they can simply limit you getting on a plane if you haven't had a vaccine, or they can use this in order to have record levels of control over your ways of owning your own money, spending your own money, and it will also be diluted over time because of the excessive money creation that they needed to engage in order to get out of the health crisis. This is a natural trend. It's not necessarily even a conspiracy, because it's probably the only solution, which means that central bank digital currencies, I believe, are going to lead to a lot of adoption in people wanting to own their own money, spend their own money without censorship, and look at forms of money that have a fixed supply that can't be diluted away by excessive government policies in order to save their countries, which is what they have to do by their mandates and what they were elected for in the first place. So that really brings me over to the trends that I'm looking at for 2020 and beyond. And we've got 20 minutes that I can cover some of these trends, and I don't think there is a way of taking questions, unfortunately. If there were, then I would take some of your questions, but maybe this will be uploaded in a format where maybe we can use Twitter, you can connect with me, you can tag me at Simon Dixon Twit, and then maybe I can take some of your questions there if you're following me as well. So I'm just going to make sure that the screen sharing works. And hopefully, if everything is working right now, I'm going to put it on full screen mode again. You can see my screen. I'm just checking with my contact whether that's all working. Yes, it works. Great. So beware the central bank digital currency. It's coming next. And I believe that it's going to create adoption in the types of trends that I'm talking about. So when I'm looking at building a portfolio in the current environment, I'm looking at 5 things really. The 5 things that I'm looking at the moment is a hedged portfolio in traditional markets that can survive in an inflationary environment, a deflationary environment, a period of economic growth, and a period of economic decline. And so really you can't rely upon any type of, whether you put it in traditional asset classes, stocks and bonds, you can't really rely upon traditional managed funds unless they have some kind of neutral strategy at the moment. And so from the traditional perspective, I'm looking at USD exposure. The reason for that is you obviously have money in your local currencies in order to make your expenditure, meet your rent and mortgage. But I believe that we're going to enter a radical politically, money reform situation, similar to what we had in 1945 when the Bretton Woods scheme was negotiated, and in 1971 when the US dollar standard, fiat standard, was born, when they removed the peg to gold. And so I think we're going to have in 2020 a similar thing. And so traditional portfolios need to be able to deal with the political uncertainty of a deflationary environment as asset and debt is being destroyed. Excessive money printing could lead to an inflationary environment. And as assets are being destroyed, if money is being created at a faster pace, then you could enter an inflationary environment, but you also need to be prepared for a deflationary environment of asset destruction that we will probably experience as there'll be winners and losers in these renegotiations. The second asset class that I'm looking at is obviously Bitcoin. Bitcoin gives you the ability to hedge yourself from politically incentivized renegotiations in the monetary system. This allows you to own your own money, spend your own money, it has a fixed supply. And therefore, I think the demand over time as these negotiations happen is going to be driving more people into adoption of wanting to own their own money, spend their own money, and have a money supply, the hardest form of money that's ever experienced, digitally. So Bitcoin is certainly a part of that. I'm also in a diversified way, I'm exploring how you can receive yield on your Bitcoin by taking counterparty risk. And so there's a wealth of Bitcoin lending services that really puts you on the right side of the debt cycle. So when you're lending your Bitcoins, you're essentially lending them to margin traders, and margin traders are the people that are borrowing them. But you have to take counterparty risk. So it has to be part of a balanced risk-managed approach. But Bitcoin lending services allow you to get yield and income so that you can compound some of those effects. Also, I believe that we are in an environment where essentially 70% of all currency is held in US dollars. So that means even the biggest countries in the world, central banks, they're all exposed to treasuries, they're all holding reserves in US dollars, gold, and I believe some of the smaller central banks will start to, if you look at my video where I talked about how Bitcoin becomes a world reserve currency by 2020, it was talking about a game theoretical scenario where smaller central banks dedicate some of their, or the country dedicates some of their electricity power to mining. The central bank holds some of the Bitcoin as a reserve asset class alongside dollars, treasuries, gold, and their local currency. And this creates a game of chicken that could lead to an heightened effect as these monetary negotiations happen. I personally want US dollar exposure. And so the exposure at a bank is that obviously the funds, you can have a certain amount of dollars in a bank, which is subject to federal deposit insurance. But beyond that, you're exposed to bail-ins. And so really looking at stable coins as an alternative to that gives you dollar exposure, because I believe that there will be a strengthening dollar unless we see what happens as these monetary renegotiations. Currencies like the other currencies and these currency wars, I created videos on these currency wars. Like I believe that the Japanese yen is positioning itself to be a crypto-friendly environment. And one of the videos I created was how Japan could lead the wave. China, I think, is less likely because they have an incentive to devalue their currency, similar to Japan, by actually making their exports cheaper because they're an export-led economy. And so therefore, they don't tend to be good candidates for world reserve currencies. But obviously, China is positioning itself at the launch of its central bank digital currency to try and get a further foothold. And America was obviously taking out some of the competition, like by making it very hard for Facebook Libra to get by, when they could have used that in order to get a backdoor, because obviously the US government has a backdoor to Facebook. And this would have been a mechanism for US, and I think that's why it might come online again, to get global data around the world using a digital currency like Facebook. This is all a race for data and control. And so therefore you've got to start looking at the incentives. You know, China made Bitcoin exchanges illegal, and therefore all the volume went to South Korea and Japan and Singapore. And it's a game of political, warfare here. So stablecoin lending is one of those things that I'll be looking at, and also equity in crypto exchanges. So the reason I'm really bullish on equity in crypto exchanges is because they make money when the market crashes, the market goes up, they earn their fees. And so I'm increasing my position in equity in crypto exchanges through Bank to the Future. They have always been a very good hedge. Just checking my time. Got another 10 minutes, so good to go to carry on with some of these. Stablecoin lending is really dollar exposure and yield. There's a range of diversification you want there, whether it be more tightly regulated stable coins versus stable coins that are less likely to be affected by regulatory reforms versus DeFi and decentralized stable coins that are all producing different yield and need to be explored individually based upon counterparty risk and yield are the two forces you should be understanding here. Also, Ether staking coming through. I believe that Ethereum is going to be used as the backbone for the decentralized, for DeFi. I think that they've established their foothold. Obviously, that's speculative as it shifts to Ethereum 2.0. But also staking, and I believe that Ethereum is perfectly positioned to be able to take advantage of some of the forthcoming trends that I believe are coming into the future, like security tokens and decentralized finance, and also centralized finance asset classes built upon a blockchain. I think Ethereum's got a strong market position to take advantage of those. But this all needs to be balanced in a risk-managed approach to take advantage of many of the different trends that would be coming through as a result of this. So those are the 5 things. I think I missed off crypto equity, but crypto equity and exchanges is one of my important things, and diversifying across geography. So I've invested in Uno Coin in India, Bitso in Mexico, Kraken, Circle, and many others, that are playing on these trends. Bitfinex, which is also part of the Tether ecosystem. So that's what I consider to be a portfolio that really is balanced for some of these trends. Obviously, the asset allocation is important. There's a lot more to that. But if you're interested in some of these things, then subscribe to my YouTube channel, Simon Dixon, and I'll keep you completely up to date. One of the things that I'm looking to do is actually look at the current environment. So traditionally through Bank to the Future, I've only been able to work with high net worth, sophisticated investors. But now some of these products and different trends are coming through. It gives us the opportunity to work with a much wider audience. So one of the things I've been doing on my YouTube channel recently is stepping outside of that niche of just working with high net worth investors and investing in the crypto industry, and actually been sharing what I've been doing, because now a lot of these products are open to the masses as well, which is a real great trend that's come as a result of this industry growing. And so on my YouTube channel, Simon Dixon, feel free to subscribe. I'll keep you up to date because this constantly changes. And so I'll make sure that. So I think that was my final slide. So there you go. That's where you can get me on my YouTube channel, youtube.com/Simon Dixon BF. And that's my Twitter handle. I don't use Facebook as much, but that's my page as well, where I syndicate across some of this content. If there was a way of taking questions right now, that would be a perfect time to do that. But I think that's everything I've got for you. So I can just give you a quick summary. Now you've got that, maybe I'll move over to my face for the final summary. Let me see if I can stop sharing my screen, and hopefully you are seeing me right now. So in the final 5 or so minutes that I've got in this presentation, hope you've enjoyed it. A summary is that over the last decade, there's been many, many different trends and many opportunities to take advantage of. It real comes down to starting with an investment thesis. My simple investment thesis was that the future of finance looks very different from the past, and financial technology companies will be disrupting traditional financial products one step at a time. There will also be a parallel financial system built outside of the traditional financial system, and the demand for people to own their own money, spend their own money, and have a hard form of money is going to be, I believe that will increase over time. Many of the people are asking me, when companies like Kraken that I invested in started off at about a $20 million valuation and has now more recently been valued at a $4 billion valuation, is it time to sell some of those positions? Well, my personal belief, I can't give you investment advice, is that we've got another 10, 20 years of growth for our industry. We are just getting started, and people are only just learning in light of some of the lockdown, the trends, the radical monetary reforms about our industry. So I believe that the growth that we've experienced in the last 10 years is nothing compared to the growth that we still have for the next 10 years. So I'm still bullish on the industry, and I will be increasing my positions into any equity crash valuations, any Bitcoin crashes, and using an approach in order to take out the emotion of that. Other thing I do, I discourage trading. I used to work as a market maker in an investment bank prior to getting into monetary reform. And when I was a market maker, I saw firsthand 90% of traders lose money at the expense of the 10% of insiders. That's the traditional market, and I see no different in the crypto market. So I encourage people to really think about a sound principle-led investment strategy. Investors tend to be the winners if they get their theories right, and traders tend to be the losers. I've seen it time and time again over the last decade. People that were there right at the beginning, that over-speculated and lost everything and are still in the same position today, even though they were there at the beginning of the highest performing asset class for like 10 of the last 12 years in the world. So, you know, the future doesn't equal the past, but I'm expecting more of the future. And I'm still bullish on the industry. And I think the utility of what our industry can give is only just getting started. So I hope you enjoyed that. I'm just going to share and end with that one final screen so that you can get information on how to stay in touch and stay on top of these trends.
Hey everybody, it's Simon Dixon again. Hope you enjoyed that. We got cut off abruptly at the end, so I just thought I'd film a quick outro for you. I was just going through the 6 or 7 investment trends. And as you all know, if you're a follower of my channel or you've been subscribed to my channel, you know that I go deeper into details of each of those parts. And I'm also working really heavily on a course right now to really be able to condense everything that I've learned over the last 20 years and more 10 years investing in the crypto industry, to be able to give a real simple, follow, easy blueprint type thing. So that I can look at, if I was starting again from scratch, what would I be investing in? Yeah, so I'm going to be doing 2 things. One is I'm going to be taking $1 million of my personal savings and allocating it from scratch, how I would do it if I was starting from scratch today. The second thing I'm going to do is show how I would do it if I had no savings, because I understand that many people are in different situations right now. But at least then people in different situations can experience how I would do it. And I'm really looking forward to bringing that to you. I've got my whole team working on that. I'm creating a lot of materials right now. And in the coming months, I'll be sharing with you exactly how you can be involved in that. So hope you enjoyed it. And remember, no matter how bad it gets, you're alive in one of the most exciting times in financial history. Peace.